Hello, hello, hello. Welcome to Now Stock Trades. Boy, it's been a while since we've been face-to-face here on camera. So I got over my cold. It was or the COVID, whatever the hell it was. I think it was COVID. It was definitely a very tough one, man. It was a nasty bugger, guys. But I'm doing well. I had to sleep a lot, which I don't like to do, obviously, for people that know who I am. So that was kind of weird, me sleeping. I hate being in the bed. So in this video, we're going to go ahead and talk about, the history of Clover. So as I was sitting in the bed, I was like, you know what? This is a great time just to, sit down and analyze a lot of, just sit down and talk about Clover and really analyze it. Okay. So I went back to like 5 years, 6 years ago. One of you guys was asking me, what are you talking about regarding no SAS? They didn't release anything. And then I gave them a video, of what I was talking about. So my recommendation is if you Google Vivek, the former CEO in Clover Health Medicare Advantage, you're going to find a lot of videos he's made in the past. So I look at these videos and I'm just, trying to see like, now we have some data, right? And I wanted to see what were the missteps, what were the mistakes, what was good about Clover. So originally, when Clover was founded, I believe in 2014, I think Oscar Health, which you've seen, Oscar Health has done tremendously well. It was founded 2 years before Clover. And they really had some mishaps regarding Obamacare. And then Clover didn't go in the direction of what Oscar Health did, which is given that Obamacare was new and it, the high probability of it going multiple, or like if you look at the Trump's administration, they wanted to, appeal Obamacare. But like in terms of Medicare Advantage and Medicare as a whole, it's been around for over 20 years, right? I think over 30 years now. Yeah. So that was a direction Clover wanted to take. And we know that when people turn 65 every day, 10,000 Americans turn 65, they either choose the traditional Medicare or Medicare Advantage. Now, obviously, the biggest thing about Medicare Advantage is that, it has $0 copay. The good part about Medicare, traditional Medicare, is like, for example, Mayo Clinic takes that versus they don't take Medicare Advantage folks, right? Obviously, there's some exceptions, but overall, that's going to be kind of the thing here, right? Just FYI, I am going to be bringing, I emailed him, he messaged me back. He's happy. I'm happy. I just need to message him back again. We are going to be recording hopefully live so you guys can ask questions, but it'll be of an insurance broker who actually sells Clover. So I wanted to get his perspective because he sees things that I don't from the senior side about like what differentiates Clover Health from all the incumbents, right? I think that'll be a very helpful video. So in this regards, Clover, one of the criticisms they had was like, you guys don't have a lot of members, right, for your Medicare Advantage. I mean, yes, you are growing really well in the New Jersey market, in the South Carolina. I mean, you guys are doing New Jersey market. They're doing really great. And, I anticipate it because, Vivek knows that area really well. He had a hospital system there. But if you look at, like, for example, Texas and all the other markets, it's a little branch, only a few counties, right? So the idea was direct contracting would be a great method for them to go into, right? A great method to just basically see and go into and analyze, okay? And then all of a sudden that converted into ACO, right? And ideally, the idea behind ACO was that it's going to help more historically marginalized patients looking at social determinants of health. So ideally, it was really helpful for that. But then we got word back from the data of last quarter, the MCR was actually quite high, unfortunately. In fact, even them cutting didn't even do anything. So strategically, they had to remove themselves from ACO. So what I want to target in this video is I just kind of basically summarize everything, and you can go ahead and find all the videos on the YouTube and whatnot and do your due diligence. I was going to link them down below, but I was on my phone, so I'm just giving you my summary. So I just take it as a grain of salt, right? But Vivek was asked about, like, this was before Clover went public. He said that, for us to be in this Medicare side, we need to go public. We need to show the world kind of how we have our numbers. We can't be behind like a private wall, which is true. And then he said, a lot of investors, they understand that it's okay to be unprofitable, especially if you're trying to disrupt the market. And Vivek, I guarantee you, he came into the capital markets thinking that he could be unprofitable for a long time and be able to expand his Clover Assistant, especially with the traditional Medicare. He was able to expand it, and while being unprofitable. Now, ideally, before 2022 and before the interest rates were, low, this was actually quite possible. In fact, generating alpha in the market was actually quite easy, right? Because alpha is, like, for example, the baseline is the S&P 500, and alpha is, are you able to beat the S&P 500? Now, again, for all the folks on our stock terminal, all of our stock picks, you can see that we're generating high alpha, right? We're beating the stock market, right? In terms of the benchmarks, right? If you look at a portfolio hedge, look at all our stock picks. I think what is it? One of them, SMCI, it literally is up in 6 months. It's up 162%. And when we called it out, I think at around, I think it was trading at around $50 or $90. It went ahead and 7x'd. Okay. If you don't believe me, here it is here. Let me go ahead and present. This is the company we called out, and it's part of our stock picks. Yeah, it went ahead and 7x'd, and was around 87, and then now it's $700, right? So I'm sitting down here and I'm analyzing this, and I know my investment thesis is correct in terms of, Medicare Advantage. We're going to have a lot of folks enrolling. And obviously, if you go ahead and take a look at Oscar, we are seeing some of these new folks start to realize this expansion with a 600% six-bagger net return for Oscar Health. The question is, and the $1 million question is Clover Health going to be that? And again, I've analyzed so many companies. I've written a book about how to find a 10-bagger. I found multiple of them. It was a lot easier, I would have to agree. I found many more from like 2016 to 2020. There still exists now. We're still finding them. But the thing is, does Clover exhibit this? And the biggest mishap of Clover was diluting shareholders in order to double down in the ACO or direct contracting, because they lost a lot of money. They burned a lot of cash there, right? And the question now is, was this cash burn useful? Because they paid for a lot of patients, or in terms of the non-insurance side, they really, really, so the idea here is, did they get good data, or did the doctors just click around nonsensically and BS the Clover Assistant when they were documenting in their normal, electronic health records, right? So that's the question there. So, right, I'm going to tell you what they're doing, because this is common sense. If you have common sense, this is. I'm gonna, for folks that don't understand, because I've been in medicine for quite some time. I've been in academics for a while, and I've been in a lot of hospital systems. So what they're going to do now is they left ACO, and they realized, because Andrew Toy has been promising that we're going to become profitable, we're going to be leveraging profitable growth. And I was watching videos of him since 2020, okay, of him saying, of course, we're going to be profitable, of course. But again, he kind of put it under the rug. Like, oh, yeah. We're going to go ahead and be profitable. It's coming. And it's very clear now no one trusts management, right? I mean, he really put himself in the shitter right now, right? And I'm saying this with complete respect, right? Someone just commented. By the way, you can comment in this video. I make it live, and again, this is live. I mean, I have nothing scripted, right? It's all just me and the camera and talking. But yeah, someone said, "Common sense isn't so common. Isn't that a bitch?" Sorry, excuse my language. That is so true, right? All right, so it, so for him saying, "Oh, we're gonna have profitability. It's coming. It's coming." Well, listen, Andrew, you are um people don't trust you anymore, right? People don't, management, they don't, Wall Street's like, oh, what the hell are they doing? Your CFO left. It's not a good look. This is not a good look, right? So now you have this data. You realize Wall Street is firm, and you're not going to bullshit Wall Street, right? So then they realize, they put their hands up. They said, okay, fine. Okay, we're going to work on profitability. And you better work on profitability, because you're going to risk your whole company and your career and and your legacy, right? So now they're doing that. They removed ACO, which was a cash burning business, and now they're going to focus on profitable growth. The problem is they're not a growth company. They're not a growth company because they're not growing at a high rate. Now they're just growing in upper high single digits to lower double digits, right? And right now they're focusing on membership retention, trying to keep their members. Because the longer they keep, so I'm going to kind of tell you the idea here, plan here, because they realize, like, if I'm going to be like, I'm Andrew Toy right now, okay? Right? My company is literally under $1 all the time. Okay. It's literally like 99 cents, right? And I went ahead and diluted. I went ahead and went into this business. I failed the ACO side, so that's failed. That doesn't look good. Okay. I have a software that I can't scale without having an insurance business, because it's very difficult to get folks to enter 2 different windows. We have to pay physicians more, which is good. It's enticing, but they really have to do it. So I'm going to have to find a way to encourage them to put in the data, but put in the data accurately, which means I have to talk to my software developers to make sure that I need to look at what they order and look at what they document and see if that documentation matches with the electronic health records, and hopefully natural language processing works. I just attended a meeting yesterday at Mayo Clinic Scottsdale, and they had a guest speaker from Northwest, a very great hospital in Chicago, neurosurgery and intensivist unit. And what they're doing is they're integrating a natural language processing network within their electronic health records to specifically ascertain one research question he has regarding, X, Y, and Z on the brain. I can't say too much because it's not, not my business to say, but people are going there, right? But the question he said everyone has access to this data. I mean, I can right now hire an ML guy and say, let me ML the shit out of this, okay? But it doesn't matter if it's not going to be directed to solve and actually help improve clinical outcomes, okay? Which is what Clover is ahead of, right? Because that's what they're doing, okay? But I'm Andrew, and I'm like, okay, so I'm running a company right now. I literally am about to cut off 200,000 members. I'm about to be stuck with 80,000. It's not a lot. I'm about to get 3-star ratings in 2025. 2024, I got 3.5. So I'm going to keep these members and making sure they return, because I'm about to make less money off of these members in 2025. But in 2024, the end of it, I should hear what I'm going to get in 2026. And hopefully that could be a headwind for me. Okay. We should be free cash flow positive. But the thing is, since I am going to earn less revenue for 2025, I can't really grow that much in 2024. Ideally, I'm talking like I'm Andrew Toy. Like ideally, I wish I got 3.5 stars. I really do wish. Man, if I got 3.5 stars in 2025, then I would be able to grow at a higher rate on the insurance side to take my MCR of 81 back to 85, maybe to 87, but it's okay. I'm still profitable. But I have a bunch of these insurance patients that in a year from now, their insurance will go down. Their MCR will go down to 80 because after a year or two, the Clover Assistant works. Problem is, I can't take on more insurance members because then my cash burn will go up. So I have to leave ACO to maybe have some growth in the insurance side, but not too much growth because all the growth I'm experiencing now in 2024 is going to drop down because of the 3.5 stars going to 3 stars. Okay. So he's kind of tackling this and going back. He said, okay, so that's the insurance side. Okay. All right. The non-insurance side. All right. We have somebody who's going to help us from the government side is going to, if you guys know what I'm talking about, I'm not going to say it, if you know, I don't want to, right. Let them do their thing there. And so they're doing that. But again, I have all of these electronic health records. We paid a lot of this stuff here. So I have all this data. Let me go through the non-insurance side for ACO and let me take all that data and let me see if I can recreate something. How could I have optimized this better? How can we have caught diseases earlier? What is the gap in knowledge between the insurance side and the non-insurance side? What is the ultimate gap here? Why is my insurance Medicare Advantage working? And for example, the ACO not working. Oh, it is bulletin point number 1, bulletin point number 2, bulletin point number 3. Okay, I have control over bulletin point number 1, a little bit of control of bulletin point number 2, not so much. And bulletin point number 3 and 4, let's say, I don't have any control over. That's the government. But at least I have identified the problem. I will communicate to the government and also my contacts to make sure to let them know, like, hey, if you really want this to grow, you need to fix these things because we can't go in there. And if they're having the problem, other insurance side, other folks are having the problem. Like for example, Humana increased their medical costs, United Healthcare increased their medical costs. Elderly people are using more of their healthcare because they suffer from more than chronic disease. Again, we've talked about this a lot of times. Go watch my other videos. Okay, I have a lot of that. Okay, so that's the overall grand scheme of things. And someone just commented right now saying, Clover Health is 104. Yeah, look at that, man. Yeah. Oh yeah, because the big man here is talking. No, I'm just kidding, right? I hope that made you laugh, right? So yeah, I need to work out, guys. I mean, I need to gain more muscle, like I lost it all, guys. I'm going to get back to it. Right. All right. So that's kind of the thinking that Andrew Toy is going. And again, Andrew Toy, message me if I'm wrong. Right. So this is kind of the thinking he's going through. He has a lot. He's sitting on a gold mine with the direct contracting, right, or the ACO. He needs to have his data scientists go through all of that. They need to go through all of it. Okay. So now let's talk about what's going on with the situation with Vivek and Andrew Toy. So he, like I said, he thought that they're able to go into Wall Street in stocks and be unprofitable. Well, that honey bunny, that's changed. All right. Rates were not near zero. All the folks that try to act like they're good investors, they're being swept away because you need to generate alpha, and it's all about free cash flow. And if you can't generate free cash flow, get the hell out of my face. Right. So this is the crux. This is the game point, right? This is the end game. Okay. So unfortunately, since they're going to go from 3 stars, it's going to be hard to evaluate the intrinsics, but we could do a margin of safety and discount rate of 15-20% to cut in those costs. But overall, what I'm trying to say here is 2024 is going to be the year for me. I've been analyzing this company. 2024 is going to be the year where it's hitting my benchmarks. I don't care about 2022. I don't give a crap about 2023. 2024 is where I'm going to take these. I'm going to take these numbers seriously. Okay. And I want to see improvement. If it's going to be, oh, we're doing this, there's some challenges and this, okay, shut the hell up. Okay, this is all right. Then this is going to be a the fundamentals is it their management and fundamentals not good, right? But again, I want to be clear. The future of Medicare Advantage and the future of all these incumbents are going to change. Their ontology, their ecosystem, the way they've been built is very difficult to change. They're built on an incumbent basis that what worked in the past may work in the future. And I don't think that is I don't think that's going to work out for them really well. So Clover, it's seeming to me that if they do grow like the incumbents, which is really goddamn slow, this could be a 10 to 20 year play. But we do have tech. Okay. And I'm hoping that this will 20-year play would turn into a 5 to 10 year play. But again, I'm looking at this year. I'm expecting to see proof of concept. Okay. I don't care about the stock price. This thing can go to $2, $3 right now. I want to see the data. I want to see, is this a long-term hold? Do they have what it takes to go into a high usage, high cost environment and be able to generate a profit? Now, we're looking at a $500 million market cap now. If they're at $1.23 billion from their insurance side, we should look at around a $600 million market cap. So this should technically go higher. But overall, let's just take a look at right now what's going on with the market. So we have the S&P 500 at a near zero, Dow near zero, still down, NASDAQ 0.39, and the Russell is at 0.22. Actually, just recently, the Russell was at 1.5. You can just rewind it. So we are seeing, and we may exhibit this, that the Russell is going to start outperforming the 2000, right? Russell 2000. And that is small caps, okay? We do believe the headwinds of this are there, okay? And we're looking for this because overall, they have risen. But if you look at the rate between large caps and small caps have underperformed, which we believe is going to change soon, especially when these rates start to cut. Okay, so I am eyeing the Russell. Now, in terms of S&P 500, if you follow our stock terminal, again, we offer a monthly subscription for folks. I've been active, even when I'm sick, I've been active on that. I give my analysis. We've countlessly number of times we've told folks, we said, hey, we believe we're going to go near 5,000, and then we're going to go ahead and have some form of a pullback. The pullback is going to be anywhere between 3, maybe just like 7%, right? And maybe 10%, right? But we don't think it's going to be 10, like 3 to 6, 3 to 7%, right? And the reason why there's going to be cuts is you're going to see like headline news here because that's just Wall Street's predictable. Stocks open higher with S&P striving to make history, right? There's going to be a headline that says Powell is eyeing the rate cut now, potentially a hard landing, not a soft, right? And then rate cuts of them cutting because they're scared of something breaking is going to cause the S&P to falter a little bit. There's going to be some falteration there. But then once that subsides and bypasses, the second half, we believe, of 2024 is going to be met with we believe that this can easily go anywhere between 5150 to 5200 plus. I wouldn't be surprised if we see 5300 by the end of the year for the S&P 500. Okay. Now, we believe that this may be the year for small caps, given these rate cuts. But we know that the next year and the following years after that, after these stacked rate cuts fall into place, we do believe that the Russell is going to take advantage. The question is, can Clover prove themselves on the Medicare side, the insurance side, right? The Medicare Advantage. And if they can, let them generate a profit to where that profit offsets the future growth of the Medicare Advantage, the same part insurance side. And hopefully, once the government fixes the issues with ACO, perhaps they can re-enter ACO strategically. When I say strategically, after Andrew Toy sits down with his data scientists and his software engineers and his physicians to go through every case report and how the Clover Assistant should have caught this earlier, how they have a lot of data now. That's a lot of data. 200,000 patients, ladies and gentlemen, that is a lot of data. Okay. They can take this data and they can make something out of it. Okay. And they already have the ontology of that, right? So they just need to go ahead and double down on it. So I'm going to see if free cash flow or something decent comes this year. And then I want to see the guidance for this year. Interestingly, they haven't reported earnings, like when they're going to earnings. Yes, I understand NASDAQ has an algorithm. I want to hear their report. That's something I'm watching. Former MIT study says, if they report after the normal date, they tend to be a miss, not a beat. Given that a lot of Q4 of a lot of insurance side was bad this year for like Humana and United Healthcare. So this is a great way for them to stand out and to show that the Clover Assistant actually does do its job. So that's kind of what I'm looking at. Also, this whole CFO thing. They do need a CFO that has an understanding of Medicare Advantage. So maybe if they can pull a CFO from the incumbents or a former CFO that worked with these things, that will be very helpful, right, and healthy for the company. But the biggest issue now is Scott left. And I'm trying to parcelate between, did Scott leave because he's just a player, right? He likes to go in the company 1 to 2 years and he's okay, they're good now. Let's go to the other company. Let's go to this company. Let's go to the other company. Or did he leave because Q4 is going to be a disaster, right? So these are the kind of questions that I'm kind of rolling in my head. Yeah, and as of right now, as you can see, the Russell is outperforming right now all the other futures. Obviously, crude oil is something else, right? So by a little bit, by a marginal on the NASDAQ. But overall, that's what I'm looking at, guys. I hope this video was helpful. Smash that like button and don't forget to subscribe if you haven't done so. Again, unbiased view, just trying to go ahead and tell you guys what I'm thinking, how I'm analyzing this, and kind of, when you buy a share of a company, you want to, you're buying a piece of a business and you want to make sure is the business moving in a way of how you would run it? Now, granted, I've run multiple businesses and I've done a lot. So, I have some experience in that, but if you don't, I recommend, just taking your time to learn about investing and all these things, and learn how to, by analyzing companies, it should come to you naturally. Repetition is the mother of learning. But yeah, out of all the stock picks I have, definitely Clover's been a straggler. And there's been a lot of issues with it. Again, it's in the early innings. I still see it as a startup company. It's in its early innings. A lot of step forwards and step backs, but again, a lot of companies had those issues. AMD, Tesla almost going bankrupt. A lot of these had these issues, but again, it's no reason for them to continue having these mishaps. They are more mature now. They know exactly what Wall Street's looking for. There shouldn't be any issue. But yeah, folks, that's all I have for you guys. I appreciate you tuning in. As of now, Clover's up 3.13%. It was up 3.99%. But overall, that's if you compare it, let's say, to Apple, Apple's up 0.5, Tesla is up 1.88, Palantir is 0.61, had a wonderful run, $24 now. SoFi is 1.61, and yeah, so we're going to go ahead and keep an eye on this one, and we'll see. Ladies and gentlemen, if you like our analysis and if you like to see all of our stocks, and more, I mean, there's a lot. People are making great money on our stock terminal. Take advantage. We created it for retail investors. Again, all profit proceeds will be going into making the stock terminal better. So this is not some cash grab. Again, we like to be very honest with our subscribers and just, be able to create something that's cheaper. If you honestly calculate all the data where we get it from, you can kind of create a mathematical model of how much it would cost you if you were to get this data by yourself, and let alone my insights that are daily on the market. So there's that. Yeah, no, I agree with you on Keith. Yeah, it's the holding of the gains, because it's kind of going robotic right now. Because again, it's about the cash flow. They need to fix the cash flow, and they got it now, right? It's if Chamath is not banging the table, they definitely got it now. They need to focus on free cash flow. They can't like say we're wanting profitability. We're wanting profitability. Nobody trusts you, right? Like you're speaking in an empty room now. Analysts are not covering you anymore, right? You only have a little bit of analyst. Like just tell yourself that in a room that's dark, right? So I think they got the point, right? It's a harsh reality. They realize how tough the equity markets are, and they're going to have to perform now. That's it. This is the year. This is the year for me. I'm looking at them this year, right? COVID's gone. Interest rates are about to come down. This will be the year to see how they perform. All right, ladies and gentlemen, hope everything's well, and yeah, happy Friday. I'll see you on the next one.